Hello, and thank you for joining us today for the Federal Home Loan Bank of San Francisco's 2026 Middle Income Down Payment Assistance, or MDPA program webinar. In this presentation, we will be providing an overview of the 2026 MDPA program, including details about the participation and disbursement processes. My name is Amparo Arzola, and I will be one of your presenters today. My colleagues Bianca Macias and Cindy Young will also be presenting. Before we start, we would like to remind those who have joined us today that this webinar is intended only for bank members and representatives of community organizations. This event is not appropriate for homebuyers or the general public. Here is our agenda for today. First, we will provide an introduction to the Federal Home Loan Bank of San Francisco. Then we will give a summary of the MDPA program. Then we'll talk about program participation and how member institutions can get started. Next, we'll discuss the income eligibility requirement for households to qualify for MDPA funds. After that, we will discuss the disbursement process and the request for disbursement in detail. Then we will move on to cover helpful reminders. Finally, we will provide the answers to frequently asked questions. Introduction. The Federal Home Loan Bank system was chartered by Congress over 90 years ago during the Great Depression as a funding resource for home mortgage lenders. Today, lending institutions use federal home loan banks to help finance housing and economic development in their local communities. There are 11 federal home loan banks nationwide, and each operates as a private cooperative financial institution. We are a government-sponsored enterprise and are regulated by the Federal Housing Agency, the same regulator of Fannie Mae and Freddie Mac. The Federal Home Loan Bank of San Francisco is a cooperative and is owned by member institutions headquartered in our district of Arizona, California, and Nevada. That means our member institutions are our shareholders and are also our customers. Our members include commercial banks, savings institutions, credit unions, insurance companies, as well as non-depository community development financial institutions, or CDFIs. While we are a privately held company, we do have a public service mission. And it's because of that public service mission that we provide a variety of products and services to help support and benefit our members and the communities that they serve. This graphic demonstrates the products and services we provide to our members, which include grant and credit programs. We offer support for affordable housing through the Affordable Housing Program, or AHP General Fund, and AHP Nevada Targeted Fund. We also provide homeownership support through the AHP Set Aside Program, also known as WISH, the bank's down payment assistance program for eligible first-time homebuyers earning up to 80% of AMI. We also provide other discretionary programs such as Tribal Nations Program, disaster relief, and of course, the MDPA program. Additionally, we have ahead our economic development program, and we provide outreach and program education, such as today's webinar, to help educate and benefit our members and the communities they serve. You can go to our website to learn more about our programs. Next, I'll provide a summary of the MDPA program. The Federal Home Loan Bank of San Francisco offers several voluntary programs to further address housing needs in the communities we serve in our tri-state district. The MDPA program is just one of the bank's voluntary, or also known as discretionary programs. The MDPA program provides matching grants to eligible first-time homebuyers. Grant funds may be used for down payment and closing costs. In May of 2023, the Federal Home Loan Bank of San Francisco launched a first-of-its-kind test pilot MDPA program with a $10 million allocation. After a successful start to the program, the funding for the MDPA program was doubled to $20 million in 2024 to help even more middle-income families and individuals purchase a home of their own. MDPA was designed to have a very streamlined documentation process, and thanks to the outpouring of support of our participating member institutions, the MDPA program has become a highly anticipated and in-demand program, with all funding being quickly committed in all prior program years. In 2025, the $10 million allocation was reserved just 2 weeks after the program launch. Since 2023, the bank has contributed $40 million through our participating member institutions to assist 818 first-time homebuyers make their dreams of homeownership a reality. The Federal Home Loan Bank of San Francisco's Board of Directors approved an $11 million allocation for the 2026 MDPA program, with a $1 million per member limit. For the 2026 program year, there are a few guidelines our member institutions should keep in mind. New this year, the bank will release the $11 million program allocation in 2 separate funding rounds. During the first round, $8 million will be available for eligible home buyers. The remaining $3 million will be released during a second round, which will be announced later in the year. Member institutions will need only sign up once per program year to participate in either round. Like last year, all MDPA grants will be dispersed to member financial institutions on a reimbursement basis. After reserving funds for a homebuyer in escrow, a participating member institution can submit a disbursement request to the bank after the homebuyer closes on a home purchase transaction. Members may submit disbursement requests for households on a first-come, first-served basis until the allocated funds have been exhausted. The bank will notify participating member institutions of the remaining program funds weekly. Now, let's take a deeper dive into the program details. As I mentioned earlier, the MDPA program provides matching grants to qualified first-time homebuyers. For a household to qualify for MDPA funds, they must have a minimum homebuyer contribution of $10,000, and they will be eligible for a grant up to $50,000. Homebuyer contribution can come from various sources. It may be household savings and may include gift funds from individuals outside the transaction. Also, keep in mind that other assistance program grants or credits, concessions from a party of the transaction, such as the seller or the lender, are allowed in the transaction, but they are not considered homebuyer contribution. The homebuyer must be a first-time homebuyer according to the bank's definition. This next bullet is especially important. The MDPA program is intended for middle-income households, and the program does have an income restriction. It is restricted to households that are earning just over 80% up to 140% AMI. AMI is based on the purchase property address. Please note, there is an opportunity for FHA borrowers earning at or below 80% AMI to access MDPA grant funding this year. I'll come back to this point shortly. Next, the homebuyer must complete a home buying counseling program provided by an experienced organization. Finally, the purchase property must be the homebuyer's primary residence, and it must be located within the bank's district of Arizona, California, or Nevada. Now, as I mentioned a moment ago, there is an opportunity for FHA borrowers earning at or below 80% AMI to access MDPA grant funding. New this year, homebuyers who are eligible to receive a grant through the bank's WISH program, but who have been unable to obtain a Federal Housing Administration FHA mortgage loan due to the bank's WISH program requirements and who have a household income at or below 80% AMI are eligible to apply for an MDPA grant. I must emphasize that FHA borrowers who are able to use the WISH program must use the WISH program. Only those homebuyers who are unable to obtain an FHA mortgage loan with the WISH program are eligible to apply for the MDPA program. In these cases, the final closing disclosure must verify the loan type as FHA and must be submitted alongside documentation, such as an adverse action notice verifying that the homebuyer was previously denied an FHA mortgage loan due to the WISH program requirements. If there are any questions on acceptable documentation used to verify, please reach out to the bank. Most important, all other program requirements will remain in place and must be satisfied for a homebuyer to be eligible for an MDPA grant. Now, I'll turn it over to Bianca, who will discuss program participation.
Thanks, Amparo. Let's talk about program participation. Who can participate in the MDPA program? Any member of the Federal Home Loan Bank of San Francisco that is in good standing may participate in the MDPA program. New this year, members can sign up to participate in the MDPA program prior to the official program launch, enabling participating members to begin reserving funds as soon as the program launches. MDPA participation materials are now available on our website. In order to participate, members will need to submit only one form to the bank for the 2026 program year. A complete and signed Secure Portal Workspace Setup Request form must be emailed to mdpa@fhlbsf.com. This form is found on our website and the MDPA Forms and Documents section. The member institution's designated portal users must review the portal user agreement prior to submitting the Secure Portal Workspace Setup Request to the bank. Please note that a new Secure Portal Workspace Setup Request is required even for members who participated in prior MDPA program cycles. You can visit our website and access all MDPA content by going to Products, Community Programs, Grants, and selecting MDPA. As mentioned a moment ago, MDPA participation materials are now available on our website, and you can find them under Forms and Documents. While we're here, I'd like to highlight the excellent resources available to support our members. The How to Upload MDPA Documents PDF provides guidance for members to successfully upload documents and avoid resubmission. Another excellent resource is the MDPA Disbursement Flowchart, which provides an overview of the program, and we'll review this together later in the presentation. In this part of the webinar, we will cover how a member determines household income eligibility, a critical step to confirm if a household is qualified for the MDPA grant. In order to determine household income eligibility, we must first determine the household income threshold limit, or the area median income set by HUD. To arrive at the correct area median income, or AMI, for the household, there are three factors to consider. First, we must identify the location, specifically the MSA or Metropolitan Statistical Area corresponding to the home buyer's purchase property address. The purchase property's MSA can be determined using the FFIEC website linked here in the slide. The second factor is the number of individuals in the household. Because income limits vary based on household size, we must know the number of individuals in the household. Lastly, we need to make sure we use the correct year's HUD income limits that are valid at the time a home buyer is qualified for the MDPA program. HUD income limits can be found on HUD's website, which is linked here in the slide. Currently, the 2025 income limits are the latest limits available and should be used until new limits are released. We expect HUD to release the 2026 income limits in the spring. Now, let's look at an example together and calculate the HUD income limits for a household of 4 purchasing a home in the city of Sacramento. When you navigate to the HUD website linked in the previous slide, you will find an income limits table similar to what you see here. Note that we are using the 2025 income limits in this example since these are the limits in effect at the time of this recording. First, we need to identify the MSA for the household. Remember, this is based on the purchase property address. The MSA for this household is Sacramento, Roseville, Arden, Arcade of California. The second step is to make sure we're looking at the column for the household size. Finally, we want to identify the very low income figure for a household of this size. HUD's definition of very low income is 50% of AMI, so we'll use this figure and multiply it by 2 to determine the 100% AMI for the area. So here, in this example, we'll take the $64,300 times 2, resulting in $128,600 as the 100% AMI. To determine a household's income eligibility for the MDPA grant, we also need to know the household annual income. Household income is based on the first mortgage lender's income calculation, typically available in the Fannie Mae Form 1008 or an equivalent document. Here in this example, we'll take the total monthly income of $11,550, multiply it by 12, resulting in $138,600 as a household annual income. Using the CDR Attachment 1 form, we can quickly calculate the household's income as a percentage of AMI. Enter the HUD 100% AMI limit we calculated earlier and the household annual income from the Fannie Mae 1008 form into the corresponding fields on the e-form. Then, we will see the household's income as a percentage of AMI automatically calculated in the field below. This percentage must be within an acceptable range in order for the household to be eligible for the MDPA grant. As you can see, this household income is within the range at 107.78% AMI, which indicates they are indeed income eligible for the MDPA grant. Now, let's go over how the grant disbursement process works at a high level. There are 5 milestones from income eligibility to reimbursement. The first step is to determine household income eligibility. A participating member must determine a household's income eligibility and confirm the homebuyer is in contract for a home purchase with loan closing scheduled within 30 days. A quick note for members working with community partners to identify eligible homebuyers in their local communities. It is the member's responsibility to determine income eligibility and reserve funds for the homebuyer, not the nonprofit organization or the housing counseling partners. Next, the member emails the bank to request program funds for the homebuyer and a designated homebuyer folder set up in the bank's secure portal. The member will receive a confirmation from the bank once funds have been reserved and the homebuyer's folder setup is completed. At loan closing, the member provides the MDPA grant funds upfront to the escrow company for the benefit of the homebuyer. Within 30 days after closing, the member submits a complete disbursement request by uploading the required disbursement packet in the bank secure portal and notifying the bank by email. Upon receipt of a complete and satisfactory disbursement packet, the bank approves the request and disperses the grant funds to the member's settlement transaction account. Our target is to disperse the grant funds to the member within 30 days of receiving the request. Once our bank reimburses the member, the disbursement request is closed. Now that we've covered the entire disbursement process workflow, let's revisit two critical steps. Understanding these steps is vital to ensuring a smooth and successful disbursement process. For the homebuyer folder setup and funds reservation step, note that MDPA funds are reserved on a first-come, first-served basis until all funds in the program year are fully exhausted. Only participating members may request funds and a homebuyer folder. A homebuyer must have been income qualified by the member and has entered into a home purchase contract with loan closing scheduled within 30 days. Funds reservation and homebuyer folder setup requests must be emailed to our MDPA program mailbox at mdpa@fhlbsf.com. The email request should include the 5 items listed here: the homebuyer's name, household income as a percentage of AMI, the subsidy amount, which is a maximum of $50,000 per household, the scheduled loan closing date, and the purchase property state, which can only be Arizona, California, or Nevada. If the home purchase transaction is canceled or closing is substantially delayed, please notify the bank promptly at the MDPA mailbox using the same email thread where the homebuyer folder setup and funds reservation were confirmed. Now, let's look at the disbursement request step in a little more detail. For the disbursement request, the member will submit to us a packet of 5 required documents within 30 days after loan closing. These required documents are all listed here on the slide. Before submission, members should ensure that homebuyer and transaction information across all documents is consistent. Now, let's review the first required document, MDPA Certification and Disbursement Request Form, or CDR form. The MDPA CDR asks the member and the homebuyer to certify that the disbursement request submitted meets all program requirements. Specifically, the form certifies the purchased property is located in Arizona, California, or Nevada. Note that this form requires certification and authorization signatures from both the homebuyer and member institution. We recommend our members to obtain the homebuyer's signature on the form prior to loan closing to avoid running into any issues with getting it after the loan closes. As for the member's authorization, the signer must be an authorized signer on file with the Federal Home Loan Bank of San Francisco. The authorized signer may be a different individual than the member institution contact listed on the form. We also require the MDPA CDR Attachment 1 form. This is an Excel form, and we've just published a new version on our website. Please be sure to use the latest version, as the old version will no longer be accepted. On top of the form, notice there's a progress bar to tell you when the form is 100% completed. The form must be 100% completed prior to submission. Since this form is a summary of the critical transaction details, please ensure the information on this form is accurate and consistent with the information found in the submitted documentation. As mentioned earlier, the homebuyer must have successfully completed homebuyer counseling prior to loan closing to receive an MDPA grant. The Homebuyer Counseling program should be offered by an experienced organization that adopts the national industry standards for home ownership education and counseling. A valid certificate of completion is required and must be included in the disbursement request packet. Another form we require members to include in the disbursement request packet is a Fannie Mae Form 1008. Let's review the information we look to confirm on this form. First, we must verify that the purchased property will be occupied by the homebuyer and used as a primary residence. Second, we must verify the household's income eligibility. For the MDPA program, the bank will accept the income calculation the first mortgage lender used, and no separate calculation is required. The mortgage lender's Fannie Mae Form 1008 must be submitted to verify the home buyer's income eligibility. Income qualification is based on the total borrower income on the Fannie Mae Form 1008 and the AMI adjusted for household size. Lastly, we look to confirm the housing expense to income and debt to income ratios found on this form. Ultimately, our goal is to ensure that the mortgage loan is affordable to the MDPA assisted home buyers and that they are set up for success in homeownership. One last important reminder before moving on. The information reported on this form should be consistent with the rest of the submitted documentation. The last document required is a copy of the final closing disclosure for the home purchase transaction. There are a few key details we look for on this form. First, the home buyer's contribution must be at least $10,000 and may come from savings or gifted funds. Second, the closing costs should be customary and reasonable. Third, the total MDPA grant amount must be evident. And finally, the amount of cash back to the homebuyer cannot be excessive. Now, I'll hand it over to Cindy to review a few essential points about document submission.
Thanks, Bianca. We will now go over the time limits for submitting MDPA disbursement request documents. Disbursement request must be received by the bank within 30 days of the home buyer's loan closing date. Any deficiency in documentation must be cured by the member within 60 days from the date the bank receives the disbursement request. To avoid any delays in review and reimbursement, it is important for members to respond to any request from the bank's reviewers in a timely manner. If the member does not comply with these deadlines, the bank reserves the right to decline the reimbursement of the MDPA grant to the member. Here are a few points about document submission. Members must submit program documents electronically via the bank's secure portal. Upon submission of the documents, members must notify the bank by sending an email to the MDPA mailbox. It is critical to redact all personal identifying information, or PII, on any documents submitted to the bank. Members should redact only the first 5 digits of any social security numbers and bank account numbers, leaving the last 4 digits visible for verification purposes. On our website, we have posted a page of instructions on how to upload the documents to the bank's secure portal. If you have any questions on the process of uploading MDPA documents, we highly encourage you to visit this page prior to submission. As a reminder, when an email is sent to the MDPA mailbox, we do our best to respond within 24 to 48 hours, but please note that this is not an automated system. We must review and respond to each request individually, so we appreciate your patience during peak times such as now during the start of the program year. Now, let's move on to funds disbursement process. The bank targets reimbursement to the member within 30 days of receiving a full and complete disbursement package. Members will receive a notification of the approved MDPA disbursement via email from the bank. The notification email will include the transaction details of the reimbursement, including the home buyer's name and disbursed amount. The bank disburses the MDPA grant funds directly to the member's settlement transaction account. Now, let's go over a few helpful reminders. Homebuyer folder setup or funds reservation requests are accepted on a first-come, first-served basis, until the allocated funds are fully exhausted. Reminder that the member should not request reservation of funds or homebuyer folder setup for a homebuyer until that homebuyer has been income qualified and is in escrow for a home purchase with closing scheduled within 30 days. Disbursement Request. A complete and satisfactory disbursement request package must be received by the bank within 30 days of the loan closing date. Reminder that the members are required to notify the bank upon submission of a disbursement packet via email to the MDPA mailbox. Income eligibility. To be eligible for the MDPA grant, household income must be between 80.01% and 140% HUD AMI. Again, the AMI is based on the MSA of the purchased property address. Cash back to the home buyer at closing is allowed, but the amount cannot be excessive. Non-arm's length transactions, such as home buyers purchasing a home from their parents, are not eligible for the MDPA program. The certification and disbursement request form requires the home buyer's signature. Again, we strongly recommend the member obtains the home buyer's signature before the loan closes. A special reminder for FHA home buyers earning at 80% AMI or below. FHA borrowers who are able to use the WISH program must use the WISH program. Only those home buyers who are unable to obtain an FHA mortgage loan with the WISH program are eligible to apply for the MDPA program. Now, we will go over some frequently asked questions. How do you calculate a home buyer's income? The bank accepts the income calculated by the first mortgage lenders during mortgage qualification. Members should use the income as reported on the Fannie Mae Form 1008 or an equivalent document to determine MDPA income eligibility. Typically, the bank does not require any additional backup documentation to be submitted. The Fannie Mae Form 1008 is sufficient. Are non-occupying co-borrowers allowed in MDPA? Transactions with non-occupying co-borrowers are not eligible for MDPA grants. How do you verify household members? The number of household members is reported by the member on the CDR Attachment 1 e-form. Non-borrowers who currently live with the borrower and who will live in the home being purchased, for example, a parent, should be factored into the household size. Members can determine how to verify the number of household members reported on the CDR Attachment 1. Are there retention requirements for MDPA? There are no retention requirements for this program. What is the maximum HTI or DTI allowable? While we do not have a benchmark, the transaction must be affordable and sustainable for the home buyer. We are especially concerned about any households with an HTI in the mid-40s or higher. In these scenarios, members must provide any additional information or details to help us understand how your financial institution determined the transaction is affordable and sustainable. The member can include any relevant notes in the underwriter comments sections on the Fannie Mae Form 1008. Please note that Fannie Mae approval alone is not sufficient or an acceptable explanation. Examples of an acceptable explanation could be that the homebuyer has sufficient savings or reserves, strong credit, and job stability. Are there any underwriting requirements? Aside from requiring the first mortgage to be affordable, sustainable, and reasonable, we do not usually have other specific requirements on the first mortgage loan. Member financial institutions are not required to originate the mortgage loan to participate in the program. Is manufactured housing eligible for MDPA? Our website includes information on the types of properties eligible for the program. Manufactured housing is allowed, but it must be affixed to a foundation. In other words, it must be real property. Could the homebuyer contribution include sweat equity? We have no objection to self-help transactions in the program. However, sweat equity does not count as a homebuyer contribution. What documents require the homebuyer signature? Only the certification and disbursement request form requires the homebuyer signature. We do not require a homebuyer signature on the final closing disclosure. Must all co-borrowers be first-time homebuyers, or does only the primary borrower need to be a first-time homebuyer? All borrowers must be first-time homebuyers to be eligible for MDPA grant funds. The bank follows HUD's definition of a first-time homebuyer. How will a member know if funds are still available for the program? Once the program opens, the bank plans to begin sending a weekly email regarding funds availability to all currently participating members. Which homebuyer counseling or education program is acceptable? MDPA requires homebuyers to complete a homebuyer counseling education program offered by an experienced organization. Homebuyer education programs offered by HUD-approved housing counseling agencies are acceptable, as are online programs such as HomeView, Framework, and Credit Smart. This concludes our webinar presentation. Thank you.